Hey everyone, and welcome back to another video for today. So it's been a while since I've covered Shopify stock, and since we've covered a lot of major tech companies, e-commerce companies in the last couple of weeks, I thought it would be a great time to go back and look at Shopify and also look at it from a reverse DCF perspective and just from a pricing perspective as well. For example, here, the forward PE. Currently, that is trading at 66.1 times forward PE, which is of course lower than it was previously. Why is it lower? Well, the company's stock has come down. As you can see, first of all, year to date, it's basically flat. In the last 3 years, the stock is down 42%, and yet the business has been doing much, much better from a free cash flow perspective. This is a free cash flow generating machine in the making. Now we're going to have a look at the projections from analysts from the market, and then we're going to play around with those numbers as well and see if it's expensive or not today. Now, if you're interested in those types of videos, all you have to do is hit that thumbs up button, subscribe to this channel. We're trying to reach 60,000 subscribers by the end of the year, so we really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's first have a look at what the company told us that it expects for the next quarter, which is Q3. So they expect to grow revenue at low to mid 20s% rate on a year-over-year basis, and the analyst consensus is around 23.24% growth year-over-year and 3.29% growth quarter-over-quarter. As for what the company told us, gross margin to be higher by approximately 50 basis points compared to Q2 2024, stock-based compensation to be $120 million, and free cash flow margin to be similar to Q2. We continue to expect to deliver double-digit free cash flow margin for the rest of the year. Now, looking at the current state of free cash flow, in the last 12 months, that sits at $1.287 billion. Now, if we look at the numbers from the last 12 months, all the way through 2026, the estimated number there, we should expect annual growth rate of around 24.59% for free cash flow. Looking at revenues, that's expected to grow in the coming years around 20 to 22% year after year. Now, looking back at how the business has performed in the last couple of years, we of course know that Shopify has two segments. We've got the merchant solutions and the subscription ones. Now, looking all the way back to Q3 2020, merchant solutions grew by 245%, while subscription solutions grew by 156%. As for gross profit, this is an extremely nice chart to look at, right? Gross profit has increased by 204.5% since Q3 2020, so almost 4 years ago. Now, if you've been watching the latest couple of videos when we did look at the analyst estimates, when you did some calculations, a reverse DCF and all of that, you know that, well, the numbers on Yahoo Finance are not always that accurate. If you look at EPS trend, that's fine-ish, but the growth estimates, for example, here next year, 20.1%, okay, fine. But next 5 years, for example, here, it says your next 5 years per annum, 46.2%, then past 5 years, 41.31%. In my opinion, that's not quite accurate. So we will use the numbers that we've seen before that I've taken from various websites. So for EPS, we can see that for the next 9 years, the average year-over-year growth rate is around 21.5%. Now, of course, you can also see that the number of analysts in 2013, 2031, 32, 33 is not the same as the number of analysts in the next 2 to 3 years or so. So take those numbers with a grain of salt, but we've taken the average here. If we look at revenue, year-over-year, average year-over-year growth rate will be around 18.1%, also from 2024 to 2033. Now, looking at forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, we can see that currently the Shopify stock is cheaper than the 5-year mean. Much cheaper than its 5-year mean. We've explained at the start of this video why that is. Company is becoming more and more profitable, and the stock is down by 42%. Plus, it's true, just from a forward PE perspective, 66.1 times, definitely not the cheapest one out there. But if you look at price earnings to growth, right, forward-looking statements here, taking everything into consideration, 1.47. It's not the cheapest one that we've seen, but it's definitely not the most expensive either. I won't even say that it is that expensive or that high. Now, we did also have a recent comment on the business, a bullish comment actually. So thanks to its industry-leading innovation, social media integrations, and user-friendly platform, Shopify can capitalize on what Redburn, that analyst, calls social commerce to increase its EBIT margin to 40% by 2026. Anticipating material enterprise merchant wins in 2025, and in consideration of Shopify's multifaceted mode, Redburn analyst Dominic Ball upgraded the stock to buy from neutral and set a $99 price target. That's a 34% upside from the price we're at today. And so we can now start plugging in some numbers here. So Shopify's free cash flow in trailing 12 months, as we've seen, $1.287 billion. Terminal growth rate right now sits at 3.73% and a discount rate of 7.78%. How do you get that? You basically do terminal growth rate plus the implied equity risk premium that gives you this number. And so the implied growth rate to justify today's price with a 0.89% error here is 17.6%. Now, of course, 17.6% in the next 10 years, that's quite a lot of growth, but as we've seen, EPS and revenue is expected to be even a little bit better than that. So yeah, I would say that we are close to fair value, maybe even a little bit undervalued today based on these numbers. Of course, you can then maybe increase the discount rate by adding an execution risk, because maybe consumer spending might not be that great if we do enter a recession and stuff like that. Then yes, then the discount rate will of course go up a little bit, the risk goes up a little bit, and that number will change as well, meaning the implied growth rate will be a little bit higher. You have to take all these scenarios into consideration, but right now we take what the market is implying, is expecting, and those are the numbers. Then looking at the PE way, we know right now the current forward PE sits at 66.1 times. But of course, as we go forward, as this company grows, we expect that PE to come down, right? So I've put here a couple of scenarios. So EPS for 2024, $1.10, growth rate 21.5%. So you reach an EPS in 2033 of $6.12. Now, if you have $6.12, a forward PE of 30, that gives you a stock price of $183.4, representing 134% upside from the price we're at today. Do the same thing with the forward PE of 25, of 20, of 15. Of course, the lower you go, the lower the upside. Now, we can also do the same with the projection, let's say, from an earnings perspective, all the way to just 2030, so 6 years from now, with a growth rate of 28%. And here I put a higher forward PE because it's 2030 and not 2033. So here you get basically less upside, well, a little bit less upside. So here you're getting 116% upside with the best case scenario, with the highest forward PE, which is 35. Then we've got 30, 25, and 20, giving you 23% upside or 17% upside if you go with the lowest forward PE in those two scenarios. Now, of course, until then, a lot of things can change, right? We are just looking, in this case, just looking at earnings per share and then applying a forward PE on that. Until 2033, a lot of things can change with Shopify. They can buy back a lot of shares, which can then change the earnings per share as well. They can suddenly become even more profitable, which will change those growth rates as well. You can then apply maybe a higher forward multiple, etc., etc. I don't like to use this way of looking at stocks, to be honest. I rather look at it this way, or just looking at the company's performance each and every quarter or each and every year, and then see if it still fits the thesis. So that's about it for me in this video. Let me know what you think about Shopify. Have you been buying, selling, holding, put it on your watch list? Let me know down in the comment section below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.